not a question of taking too much of time in building those numbers and too much of investments going in building those financial reporting and all. It's more about the relevance of it, right? And relevance is more crucial. So for a firm like us, we are in an annuity business, the loans are for long term. So it's important that you evaluate me from a longer perspective and see how am I behaving on a trend line perspective. And the right way to measure would be maybe year on year. But if year on year is too long, maybe 6 months is the right measure. But for a quarter to measure me and for me to measure from one quarter to the another, sometimes becomes difficult because there could be some particular one-off event which could happen in a quarter. And since it's too short a period, your numbers may not get aligned to the impact of that particular issue that came in and all. And therefore, you end up then giving a lot of explanations to why this quarter has had this kind of aberrations to what it was in the previous quarter, whether it was good or bad. Both is not good because it's about stability and consistency, which is important or not. So that's the only reason why a quarter reporting can be a little more. A quarter reporting sometimes may not be needed, and it's more important that you go for a marginally longer tenure, which could be 6 months and all, because that's where you see a far better trend and things are more stable in that particular period than just a 3 month period. Because 3 month period is just too short.